Trading Market Technicals morning call video for Thursday, October the 3rd. Another down day in the markets. Dow down 58, Nasdaq down 2, almost 3 points. Holding up still very well. S&P down 1, and Russell down about almost 5 points. And that's still with this uncertainty with the fiscal cliff issue, the government shutdown, no resolution in sight, so the markets are just kind of selling off. However, I have mentioned before, the markets are selling off. We do have some indicators that we're looking at that I just don't see a lot of fear out there. I do think that markets have seen this before, and they're going to get a resolution within the coming days. But in the meantime, we can start selling. We do have window dressing at the end of September that we went through. We had some mutual fund inflows for the first couple of days. Markets were propped up pretty well. Now we're getting into Thursday and Friday, and this is where we're going to see either a pickup in selling, or we're going to see some renowned bids come in and markets starting to pop up a little bit. Now we are at some critical support here in the minis, which I would see somewhere around 1663 to 1668, somewhere around that area. I would be looking for any type of bounce, and that would be my first buy-in of the market if we do get that flush this morning. Now we were down about 9 handles around 8:30 Eastern time last night, and now we're relatively quiet here. Down about 275 in the minis electronic session. So we're basically just kind of floating around, doing not much of anything. And right now, as we speak, the European session is relatively quiet. FTSE up very small. So we are seeing a little bit of bids come in. Nothing to write home about. But today, tomorrow is going to be really, really interesting. We have been down now, let's see, since the FOMC meeting, probably 9 out of 10 days, or 10 out of 9 days, whatever. The thing is that the selling was very controlled, and that's something that you need to take a look at. Again, I do think we get a flush. I do think that the markets are poised for a flush, that we get some sort of one big push down and then shake out all the weak hands, and then that would be a great buying opportunity. I do want to show you a few indicators here, and this is the New York Stock Exchange new high. Now, we are making lower highs and lower lows. Not good, and this is something that we are, if you can see here, we're down here at the lows, and RSI is kind of right in the middle, around 48 or 50%. But this is not a good sign, but we do have, if you notice, the new highs are kind of stuck right around the 146 area, which I would have suspected that we would be down more here. Okay, so new highs, yes, we are making lower lows and lower highs, but we're not really taking it on the chin, so to speak. Now, the McClellan Oscillator really not telling us much of anything here. We're really neutral. And if the markets were in fear, I think you'd see, again, the new highs really breaking down, and you would see the McClellan Oscillator start getting down to the reading 50-60%. When it gets stuck in this area here, you really don't have much of anything. So the markets are just kind of drifting lower, and the indexes are really what's moving. Some of the stocks are moving. Some of the high beta name stocks are really getting hammered. But some of the technology stocks are holding in relatively well. So we have a mixed market, and when I have a mixed market, I like to take the best setups or step aside and just wait, keep the pallets dry, and then we can jump in with two hands. Now, let me show you the New York Stock Exchange new lows. Now, this is kind of absurd, right? You would think that there is something wrong with this indicator. New York Stock Exchange new lows. We have been down almost 10 out of 9 days. Why hasn't this spiked? Well, nobody really is selling stocks. That's what I'm getting. I'm saying to myself, okay, well, this should be here. We had a 3-4 day sell-off. We spiked dramatically. We have an 8-day grind. The markets are in tune here. They're in check. So that's fine. So right here is telling me that really there is no fear. There's no fear in the market at the moment, thinking that the government will get their act together and open up the government offices and get this fiscal cliff issue resolved. Tick holding well above zero. Yes, it is moving lower with the market a little bit, but holding above zero. No spikes below. So again, relatively quiet. Now the dollar's taking the hit, and remember, analysis until something changes. Now, was looking for the dollar to rally hard. Now the dollar is getting really obviously decimated on what's going on here in the U.S. And we'll see once that gets resolved if we get a sharp move in the dollar. Right now, there's no trade in the dollar. I wouldn't be short and I wouldn't be long the dollar here. I'd like to see some stabilization and then a break higher, and that's when we would start looking for some currency pairs to look to buy. Now, in the meantime, I would stay away from the dollar. It's really getting hammered because of what's going on here. So let's just kind of keep it at check. But I would definitely keep watching what's going on with the dollar, because at one point the dollar is going to make a dramatic change and turn with what the market is going, what the market's happening here. So, and when that happens, it affects a lot of the commodity and currency pairs. So just kind of keep an eye on that as well. Let's take a look at XLF. Now, I identified a head and shoulders pattern in the XLF here. We still are in a valid triggered head and shoulders bearish pattern. We are back testing this area here. Anything breaking back above this left shoulder and right shoulder, I'm gonna call it invalidated, and I'm just gonna scratch that pattern. But right now we're still good, and as you can see here, the bullish percent is just kind of streamlined. We did get a trigger to the downside, which validates this pattern here, which I like. But right now we're just kind of stuck here. We really haven't done much of any type of selling at all, getting away from this neckline. So keep an eye on it. Remember, you know, Goldman, one of our leaders, JP Morgan I look at too as well with the XLF, and we're just kind of stuck here. We haven't really gone anywhere. So not bad, but not good either. We want to see leadership take its leadership role, right? We want to see it rallying here with the rest of the market. Now tech is holding up not bad. It's actually holding up well, but I like to see it come in a little bit. I like to see tech really start boosting higher, along with some financials, to really get some good internals and say, hey, you know, I have no problem buying this market. If I get a 1 or 2 day pullback, I'm okay with it. Right now, you really can't, kind of, because the markets are wishy-washy. Anything could happen, right? News trumps the charts, as we all know. So just, you know, I would keep the palates dry. If you're going to buy stocks, you got to buy strong stocks. If you're going to look to short stocks, you got to short weak stocks. I know it sounds silly, but believe me, that it does work, especially in this market. When you get a market pullback, stocks come down a little bit. The strong stocks will come down a little bit, but they're not going to be decimated to your account. And then when they do turn, they turn violently to the upside, because everybody's watching the strong stocks hold in, and then here you go. All right, now let's go into some of the chart. Let's go into the chart segment. Now, gold. I've been telling you gold. I've been looking to short gold, and I've been short gold, bearish gold, excuse me, for at least up into this area here. I think when we first broke down here back in April. I like gold short. I think gold is going to be a great short. I think gold will take out the GLD will take out this lower head here. Now, I prefer gold short back up into this area here. Now, if gold takes this out, takes this little pivotal low out, then yes, I will short gold below this area with a stop just above here in the GLD. I'll use the ETF GLD for the first target here, and ultimately much lower. Okay, so I do like gold lower. Now, USO, I had mentioned yesterday, said, guys, oh, and by the way, congrats to a lot of people were taking. I noticed a bunch of guys took some of the USO trades. Well, that's great, as long as it fits into your trading plan. I said USO, you can buy USO a break of the previous day's high with a stop well below here, well defined. You know, you're easy to manage, and sure enough, we had a big push on the upside, and crude oil was down 45 cents in the pre-market. And when I saw a headline out of Google, crude oil down 10 days due to the global shutdown and uncertainty of demand, that was, to me, I'm like, that couldn't be a better buy-in in the USO. So I'm glad everybody took it. Hats off to a lot of the people that took it, and I hope you made some money. Now, where do we go from here? You got to keep this as a retracement rally. That's all it is. I would take this as a one-hit wonder for now. With the uncertainty what's going on, yes, it can affect the crude oil. So I do like this. I like it. I would prefer it to really get hammered and get back down in here. But USO is waking up now. If USO can chop around and stabilize at these lower levels and then break out again, then I would buy some outdated option contracts, December, January's, because seasonality, we are into some strength into gold. Into crude oil going into the holidays, and then it kind of starts to fade away going into the winter months, because all of that heating oil that's been purchased and crude, and that's all the products of crude oil already been sold. So you want to, if anything, look for a buy-in in crude between now and December, even January, and then that's when you want to make that sale. Okay, but anyway, good hats up. I like the trade. For me, it would be just a one-day thing for me. But let's keep an eye on USO for a long trade again. We want gold as a short candidate, so we're going to be watching that on the watch list. Now, here's what I wanted to show you. Here's the S&P 500 cash. We have the ATR, average true range, and we have, of course, the price action of the S&P. Now, as you can see, when markets rally, right, we see markets rally, average true range drops, right, because volatility drops, and you can see that here. Well, what's interesting is that we had a market rally, and we have a market sell-off, and the average true range have gone nowhere. Where is the volatility? It's just absolutely insane. Oh, well, you know what? Speaking of volatility, I did want to show you the VIX, and I apologize for that. We had the Bollinger Band. We had price come out of the Bollinger Band, which triggered a possible sell signal in the VIX and a buy signal in the markets. We did get that confirmation candle down. So now all we needed was another candle to take out this previous low. We did not get it. We bounced back out. Now we're back out again in the Bollinger Band. So we need to see today the market stabilize again and close back in it. If it closed back in it, I think this would be more of a meaningful buy-in for equities, and obviously a sell-in volatility. Okay, so let's keep an eye on the VIX. The VIX is actually interesting here, acting pretty weird, but I would have suspected that we would catch a little bit more of a bid, since we are in the short term oversold. But that did not happen, obviously, because we have some issues here in the government in the United States. So keep an eye on the VIX here. We are outside now. Now, we can actually sell off hard today and tomorrow, and I would not doubt that at all if we did. And then, of course, that would keep us outside and elevated of the Bollinger Bands. But watch what happens, see what happens today, because if we do get a close back in the Bollinger Band, that would we will be looking for, again, a buy-in in the equities. Now, we have some chop here, and that's normal because we have uncertainty in the markets. So prices fighting each other, bulls and bears are fighting to stabilize in what direction it wants to go in. Okay, so anyway, interesting here. That's why I wanted to show you the volatility. So let's get into the chart segment. And what I have here is I have the S&P Spiders weekly chart. And if I had this here as a channel, and within the channel I have a nice bearish rising wedge, right? If you take this away, in red I have a bearish rising wedge. Now, this is a bearish pattern, it is, right? But we are making higher highs and higher lows. Well, Mark, why would that be? It's only bearish if it breaks the pattern. Now, the lower trend line needs to break, and then we usually get a back test of this lower trend line. And once that fails, that would really confirm, would give you better confirmation that now we are indeed headed lower. Okay, this is a bearish pattern, but only bearish if it breaks. So you can take this as either a channel, or within the channel you have a bearish rising wedge. So interesting development. I just want to see what happens here. So we're still holding above the 20 on a weekly chart. And again, we still have today and tomorrow. And more than likely, if we do fail, we would break back out. But then don't forget, it's a weekly bar chart. It's a weekly candlestick chart. So we need another week for confirmation. Probably going to need 2 to 3 weeks, because you need 1 week down, then you're going to have another week that back test, and then another week to take out that previous week's low. So you're going to need at least 3 weeks for this pattern to even develop. And by then, would take us to the mid to end of October, and that would really get us into the end of seasonal weakness. So let's just see what happens here. Again, it's just a pattern, and it's not validated. Very sloppy, as you can see here, right? If we go all the way back here in the Spiders, we had this beautiful uptrend channel. Yes, we did breach it. We came back up. We sold off, and now we're coming back into a smaller channel. We are holding a 61.8% Fibonacci retracement from low to high here, and we have an inside day. So now We have to say which direction the market wants to go. Let's be patient. And if we take out the 169.40, 169.50 area, I think that we would indeed at least rally to the upper end of this range, and then we'll have to see where we go. If we do start to break lower and start to take down, now this is on a closing basis, okay, we're on a daily chart here, then I would think that the markets would probably test this low here, and then of course the 200-day moving average. I don't think that's far-fetched, and I don't think that is not possible. I do think it is possible that this market can go lower, and I think 2 or 3 days of a big flush, the markets can do that. Now, look what's happening with the Bollinger Bands on the 30-minute. We're just grinding slowly. That's why there's no volatility, right? We're just grinding down, gap up, gap down, gap up, gap down, and we're slowly grinding. That's why I said be selective if you want to hold some options, put credit spreads, call credit spreads, whatever your flavor is. If you're looking for play in the market, buy strong stocks and short weak stocks, because they're going to hold up relatively well in a down market, and or move in your favor if you're short and in a relatively short-term downtrend. But again, we're starting to tighten here, so we're looking for a bigger move here. We don't know which direction, but just make sure, realize that we're probably going to be looking for a bigger move in the S&P and the spiders. Diamonds, what can I say? Really no change here. Just kind of stuck in this area. But if we lose yesterday's low, then I think you're going to see a deeper downside here, move lower, at least at this point here, which would probably coincide another day or two with the 200-day moving average. Here is the IWMs holding up really, really nicely. And I mean, this is definitely one of our leaders, holding up well. Now, if the Russell goes and the Nasdaq goes, I think so goes the market, and then I think you're going to get that flush. So that's why I'm watching patiently to see what happens with the Russell. But money's coming in. This is a good gauge of risk. Risk on. They are not worried about what's going on here with the government here. So this is money's flowing into. So when you have a rotation of money, it's just going into different asset classes, right? So money's really not coming out of the market. It's going out of the S&P and the Dow and flushing into the Russell and into the Nasdaq, which is fine. And so that means you're not going to have that deeper downside move. But if the Russell and the Nasdaq starts to move lower, then I think we're in trouble. Transport's holding up well. Inside day from the previous day, no big deal. This is actually something we're above the 20, above the 50, and way above the 200. So I think that this could be a shallow correction. Again, if the loonies in Washington start talking, who knows what could happen? But it does look like it might be a shallow correction here. Goldman, out of the bullish falling wedge, very small bullish falling wedge. But again, Goldman needs to prove itself. We really need to get above 161 here to really get going to the upside. 161 would entice me to start looking at some put credit spreads to look for at least a move to the top side here of 169.50. Here is the XLF, again holding that trend line. It's going to need to hold, because if it starts to flush, your first test is going to be this pivotal low, and then of course the 200-day moving average, and we don't want to see the banks start to move lower, because then we could get a chain reaction. Once the banks start to move in the financials, we can get Nasdaq to sell off, and then Russell, then all bets are off to the upside, and then we will see that deeper downside correction in the coming weeks. Here's Apple. Apple, just to me, is very sloppy. I have no trade in Apple. I have actually no opinion in Apple until we break above the 497 or we take out the 465. So to me, Apple's just a day trading stock, and to me, it's not even a great day trading stock. Leave it alone. Let's see what happens. Let's see if we get a flush or a push to the upside. And lastly is the Qs. As you can see here, are holding up relatively well. So remember, guys, we want to see the Nasdaq, we want to see the Russell and the transports continue to move higher. We'd like to see some participation from the XLF, and of course the financials, Goldman Sachs, JP Morgan. If we start to lose the two leaders that have been holding this market up, Nasdaq, transports, 3, and of course the Russell, then I think all bets are off to a shallow pullback, and we do get a deeper downside correction. Only time will tell. We're going to see in the next few days and going into next week if this market will have some legs to the upside. All right, be safe out there. Use your stops, and we will speak to you tomorrow. Take care.